Broker Bulletin acknowledges the traditional custodians of all the lands across the country on which we record our podcast and pays its respect to all Aboriginal and Torres Strait Islander people. Welcome to the Broker Bulletin podcast, where better begins. Join us as we chat with brokers about what's working for them, what drives them, and the real challenges and wins that matter most right now.
Hi everyone, welcome to a new episode of Broker Bulletin. I'm Chris Hall, the founder and managing director of Blue Crane Capital, and I'm excited to be hosting today's episode where we'll be diving into a huge growth opportunity, commercial lending. Whilst it's an exciting area with so much growth potential, it can be complex, and these deals often need more flexible lending solutions. To talk through the topic today, we've got Ben McKell, Head of Commercial at Brighten. Welcome, Benny.
Thanks, Chris. Delighted to be here, mate. Good to see you again.
You too, mate. We've known each other for a while. I'm not too formal, so we might kick off with some non-lending questions.
Sure.
Just to get to know you. Really quickly, mate. Pineapple on pizza or not?
Pineapple on pizza, mate.
Good, man. Dairy or oat?
Dairy.
ChatGPT or Claude?
ChatGPT. Stick to the OGs.
Yep. Bali or Fiji?
Fiji, mate. Don't like the barley belly.
Either do I, mate. Bank or non-bank?
Non-bank.
Good answer. And then last one, bit of a segue, apply online or manual app?
Manual app I prefer, just in, especially dealing with some commercial brokers. But apply online's also good for those who know it. It's a bit of a tough one. I like both either way. Depends on the complexity of the deal too, right? Yeah.
Good answer. Benny, Brighten obviously have come on board with LMG Commercial on the panel recently, which is a great outcome for LMG brokers, I feel, for commercial solutions. Do you mind just giving us a quick overview of the Brighten offering, high level, and the type of borrowers and lending scenarios that it's designed to support?
Yeah, sure. Yeah, it was a big win for us too. Like, we've launched commercial in the market about 2 years ago. And when we wanted to go to market, we, exclusively, wanted to deal with aggregators such as LMG, because we know LMG exclusively has, great set of commercial brokers. Now, when we launched commercial lending, we were very careful about it. We know there's so many commercial lenders out there, so we wanted to provide more competition for brokers, more access to brokers as well. So not just your commercial brokers, but residential brokers wanting to write commercial. So our sweet spot, we came out with a couple of solutions. So we provide loans up to 15 mil. So it really plugs that gap in that non-bank space. There's not a lot of non-bank lenders that lend up to that leverage at 15 mil. 30-year loan terms, set and forget, no annual reviews, no GSAs on trading businesses, which, a lot of self-employed clients like, plus brokers as well, because it frees up any future transaction deals that they need to work on with that customer. And then in terms of our product suite, we came out with your full doc deal, alt doc deal, lease doc, no doc, and then we have an SMSF product as well. So pretty excited about the no doc product as well, because it's another private lending option for brokers to have access to, which, we're seeing as a growing space in this market.
And in terms of deal flow at the moment, where are you seeing wins?
Wins at the moment, we are seeing alt doc solutions for self-employed clients. And the reason for that, so, we can provide account letter up to 5 mil. So even though we got up to 15 mil in loan limits, we were not really going to leverage that high on an account letter. But the fact that we can go up to 5 mil at 80% LVR, it sets a benchmark and very high differentiation compared to some other non-banks out there. We also got a lease stock product, which is gaining some traction because the type of customers that we assist with, it's broad borrowers, right, Chris? It's not just company borrowers, but it's individual borrowers. It's trust borrowers. It could be unit trusts with SMSF holders as unit trusts. We can assist with in-species transfers, plus we can actually offer lending solutions to non-residents. So non-resident clients traditionally like investing in Australia, and maybe they want to invest in commercial real estate assets, and now they've got the access, and so does LMG brokers with Brighten for LMG.
Just taking a step back for the residential broker that probably does a couple of commercial deals a year or sees those opportunities, or even for a commercial broker that hasn't used Brighten so far, how should they attack it up front with you guys? Like, how do they show you the scenario? What high level information should they be giving you so they can price the deal up correctly?
Yeah, sure.
and so they're just fully prepared for the deal?
Okay, good question. So, look, we've got dedicated commercial BDMs across the country, which is great. So we really wanted to segment that specialization for commercial. We feel that certain commercial lending deals need some commercial expertise to it, and then especially if we're assisting residential brokers that maybe haven't written a commercial deal before, or they've done a couple, and maybe they've seen a specialized type of asset that they need some assistance with. We can provide high level support to them. So from a scenario point of view, it's pick up the phone. That's always the best. If a broker wants to email the credit paper through or high level scenario for email, that's okay as well. But we always like just talking about it over the phone. I think that's the easiest thing. Let's talk about the nuts and bolts of a commercial transaction. So, who is the borrower? Who's that sponsor that we're going to be entertaining? What's some information on their background and industry experience? What type of security they're looking at? So we want to see the full address of that security and how the broker is looking to lodge. Are their financials available? Are they looking at it like a simple, full doc option, or if financials aren't available, what other alternative documentation, can we have a look at? And then down the path, if we've got a client that just needs quick access to capital, maybe they haven't lodged their financials yet, but they're sufficiently security backed, we've got private lending options available as well.
Let's talk about that for a moment, mate, in terms of obviously private credit's been exploding over the last 5 to 7 years. And not many non-banks have that private credit product. Did you want to just dig into that a little bit more in terms of like what type of securities Brighten likes in terms of the private product?
Yep, sure. So with our private product, we cater to all types of securities. It could be residential, investment properties, commercial securities, whether they're owner-occ or investment commercial, and then vacant land we can cater to. But then we go a bit more granular in terms of commercial assets, what we can look at. So we can get real nitty-gritty on the specialised securities. So things that we look at and what we've assisted with in the past is aged care properties.
Okay.
We can look at boarding homes, childcare centres, hotels, pubs, caravan parks. We've assisted one in a metro location in the past. So we go a bit broad to some of the traditional banks where they stick to those specialised assets. And why brokers, I think, are choosing, non-banks and non-banks such as Brighten is we can provide higher LVRs on specialised securities. Like childcare, for example, we lend up to 80%. We don't see any risk in that type of asset. Okay. It's an essential need, let's be honest. So, and we'll lend across all broad ranges across, the country. So it's really diverse on why the brokers would speak to us as a second option. Because if they've got a client that maybe wants a higher LVR or a longer loan term with no annual reviews, that's why they should get in touch with their Brighten BDM.
And this might be a broad question in terms of like location on security. Is it mainly metro? Like, do you dig into regional areas?
We go like sub-regional. So we'll do Cat 1 and Cat 2 locations for commercial. That's why we look at anything, Cat 3 and above. It's just not one for us to entertain at this stage.
And in terms of that category, Cat 1 and Cat 2, is that mainly driven by population?
Yeah, it is population. So ideally, we're looking at populations anywhere, you're talking about call it 15,000 plus. That's what we're looking at in terms of population. And then we do have a handy postcode tool that the brokers can actually log into our tool, punch in the postcode and let them know where it sits, Cat 1 or Cat 2. But then if it's showing as Cat 3 and, that broker is familiar with that area, go, well, it's got some significant population, or it's only 5 Ks from this main, CBD type hub, we can actually do an exception and look at it to consider. So, they're the types of things that we're seeing.
Fantastic. So in terms of the application process, I'm sure you can touch on this as well, but in terms of credit, is credit based here? Once the application is submitted either manually or apply online, is it a one touch in terms of the one credit manager looks after that file? Do you want to just maybe articulate what the application journey looks like, who touches the file, and once we settle the deal too?
Done. Okay, so the first step is, I guess, accreditation. So a lot of brokers ask, am I accredited for commercial? The good news is when we launched with LMG, we actually automatically accredited every single LMG broker. So that's good. So regardless of their experience, we just wanted to remove those barriers of entry for any broker wanting to lodge a deal, especially if they've got a live deal. They don't want to delay a day delay just getting that accreditation set up. So we've already taken that pain away, which is good. And then the application process, look, ideally apply online because digital is faster. It goes straight to the credit queue as credit assessor. However, if there's multiple trusts involved, multiple borrowing structures, we can take manual applications. We will always keep that option open. We're never going to close that option. So a manual application does take about, I always tell brokers it's a day SLA to load that application into our system for our support team, which goes directly to credit. Our credit team is all based in Sydney, so it's all onshore, and our credit can speak with brokers. So generally when applications lodge, we commit to an SLA of 3 to 4 business days. And when we issue a conditional letter to the broker via email, the broker's got an option to pick up the phone, and talk to that credit assessor, because maybe the credit assessor may have missed a document that they're asking meaningful. It's human nature. Humans make errors. Or there's a condition on there which can just be quickly crossed off over a phone call. So we really wanted to make it transparent and easy to do business with. I think that's the motto that, when we set up commercial lending at Brighten, it's like, how do we make it easy for brokers? Because brokers are our customer. We don't deal with customers. Yes, a customer can submit directly with us, but 99% of our business is through the third-party broking channel.
Yeah, and I can vouch for that. So a few of the Blue Crane brokers have submitted Brighten transactions in the last couple of weeks and had them approved and settled. So it was a really good experience for some of our brokers. So in terms of valuations,
yep,
some of the commercial brokers that have got a lot of experience, a little bit savvier in that space, particularly with commercial assets, and I'm a little bit OCD myself in terms of controlling the valuations. Is that something that Brighten allows? Like, can we order the valuation?
Yeah, spot on. 100%.
Okay.
Yeah, we really wanted to get that right. So just how you would order a residential valuation through Property Hub Core Logic, you can do exactly the same process with a commercial valuation for Brighten. So you submit the request online, you'll get 2 to 3 quotes, as you know, from the select panel valuers that are on our panel, and then you get to choose which one you want to deal with. So some of the valuers that we have on panel is Acumentus, CBRE, M3, Heron Todd Wide, Optium, Preston Rowe Peterson. The list goes on. So we've got a good diverse spot on panel. And
then once the deal's approved and we're looking to settle,
yes,
legals.
Yep. So our panel solicitor that we use at the moment is Green Mortgage Lawyers. We find them really good to deal with because, they are a lawyer firm business too. So sometimes you need that expertise for correct legal advice.
Yeah.
And they do provide that to us. Like I ask them questions constantly. I've been in commercial lending for 20 years and I still need to ask them certain questions about certain trust structures where they provide that advice. And they're really helpful. And the good thing about the documentation process, so when it's formally approved, it automatically gets tasked to Green Mortgage Lawyers and they can prepare the documents within 2 business days. If it's urgent, we can escalate it to get it sent out same day. And all the documents are emailed, which is good too. So from end to end, like even the application form can be DocuSigned. Everything can be generally DocuSigned.
It's DocuSign, okay.
Yep, except for independent legal advice. Sure. So with commercial lending transactions, each commercial deal, will need independent legal advice. However, if we're doing a refinance of a commercial deal, we're not going to request it because we'll be able to cite that they've done it before. Or if you've got a customer where they're an astute property investor, they're acquiring their second or third commercial property investment, they know what type of risk they're entering, we can get that waived as well.
And so in terms of, and you touched on it before, going up to 15 mil, that's a massive point of difference in my opinion. There's only really one other non-bank lender that plays in that space. There's quite a few non-bank lenders that pushed up into the 5 mil borrowing debt size, but pushing above to 15 mil, I think that's a huge point of difference. Have you seen many of those transactions yet?
Yeah, we've definitely seen them and we've settled them. So some of the transactions are, recently settled. It was, a 10 mil deal or 10.2 mil deal for an asset in Queensland. This particular asset had DA in place for 30 stories. But it had a dwelling on it as well. So yes, when we value the property, we're not going to take the best use value. We still need to do it as is. But because I already had that DA in place, it did have a strong value against it. And this customer, their journey with this asset was just to hold it. They wanted to purchase it. They'll hold it. They were doing, a bit of a development on the side when they were ready to complete this type of development themselves. Their exit strategy was just to refinance to another lender to assist with that construction. But they just wanted to quickly snap it up and take it out of the market. So we've helped with those transactions. We've done some full doc transactions for a customer that's develops boarding houses.
Okay.
So it was a refinance from one of the majors actually because this client needed to leverage an extra 3 mil cash out.
So you're fine with the cash out pushing up?
Cash out is fine. We've done cash out. Yes, anything greater than, 500K, we're going to need evidence. But we've done 2 mil cash outs for clients wanting to do developments. So with us at Brighten, we don't do development or construction finance. But if they want to develop another property, we're not taking security and we can see the building plans. They've got the DAs in place, maybe a QS report, and we can see the itemized costings that they're legit going to do a development, but it's just not on our security. We can actually release those funds.
Is that right?
Yeah. So it's based on their experience too. So we wanted to be flexible in that approach because I know when when it's cash out, some lenders, they want to control it, right? Yes, if they want to buy a future property investment, like if we get a purpose from a broker, future investment, well, we need to know what it is, right? It's credit will go, look, we're not going to release $1 million for future property investment. But if they tell us, upfront, well, this client's, does some small scale developments, they're looking at doing development. If we can see those building plans are in place, they've got, all the itemized construction plans and everything like that, or a building contract, we can actually release those funds to them.
I think there's many commercial brokers that their ears just pricked up then. You're saying that in terms of going up to 80% on boarding houses.
Yeah.
Because they're obviously cash cows. So once they're up and running and managed well, they're fantastic assets.
Good high yields.
So just on that example there with the developer, what additional information did he or she have to provide to substantiate full doc? Because if I look at the bank land, they'll want at least 3 years for a developer and average that out.
Yeah. Well, with us, look, for a developer, good question. So we won't do an account letter for a developer, right? Just it doesn't make sense because we know that their cash flow is slumpy, right? It's they're doing construction. They probably won't see those funds for another 12 to 18 months. We will, however, look at full doc transaction for a developer, but only on 2 years financials, and we can take the average. Yep. Or we can do a private loan for that developer client. So no doc type solution, where we can lend it on our private loan. We'll lend up to 70% on a residential asset or 65% on commercial. But then we want some more notes from the broker about, okay, what prior projects has this developer done? What projects are they working on at the moment? Do they have a website presence? Like we definitely want to see if they are a developer, they should have a website presence. And if, credit, actually punches their name into Google, we should see some type of online presence there based on their experience.
Okay, excellent. And then the actual non-bank space itself, there are a few players in the market. So in terms of Brighten commercial and your position, where do you guys see yourselves winning over the next couple of years, given some of the market conditions as well? My personal opinion, commercial assets probably won't be hit as hard as residential, but time will tell. But where do you guys really see strategically winning with brokers and more specifically LMG brokers?
I think, we're set for that. And, you touched on before, the current market conditions, right, Chris? So we know based on the recent tax changes, negative gearing changes, it has reshifted the mind focus of a traditional investor who invests in residential property. And I always like to see where there's chaos, there's opportunity. Yeah, and I think commercial lending, if you're doing commercial right now, this is a good period for brokers who are writing commercial, which is why I think it's important for brokers who may not be writing commercial to actually start looking into that space, because your traditional investor, whether they're self-employed or not, it could be a PAYG client that has maybe 3 residential properties under their portfolio. Maybe they want to diversify now and take advantage of commercial assets. The type of commercial assets which I'm seeing good yields is, it's the boarding houses, that you mentioned, childcare centers. Medical suites, which are, specially purposed for fit out. They're your long-term sticky type clients. Petrol stations and supermarkets as well. We're still seeing a need for supermarkets, and we lend to supermarkets at 80% as well, medical suites 80%, where it could be a strip of 8 shops. And we look at the income, we apply a non-banker sense. So there's always a little fancy acronym whale that's thrown out there. When you look at leases and lease terms, we don't really get that granular on there. Like if you've got a strip of 8 shops and then, one's got 1 term remaining, 3 terms remaining, sometimes we don't actually do term of lease. With our lease stock, we can actually still lend up to 30 years on a lease stock product. So it's really flexible in that regard as well.
And then that's a good segue onto your lease stock product. So we're seeing a fair bit of that at Blue Crane. Okay. Particularly in the last 6 to 12 months working with some commercial buyers agents. Did you want to maybe unpack the product a little bit in terms of how you view serviceability?
Sure. Yep.
That'd be great.
So with our lease stock, we're seeing more brokers come to us for their scenarios where the banks are saying no. Some of those reasons are with our acceptable borrowing types, it's not just available for company borrowers for lease stock. We can actually lend to an individual borrower. Or a non-resident borrower.
Because there's not many that do that.
No, there's not. And we saw a gap in that market, and it made sense. If the lease is sufficient to service a loan that we're holding over that security, we can entertain that type of customer. We're also seeing transactions for cash out on unencumbered commercial assets where there's a lease in place. Some of the banks are saying no to that, where we can actually facilitate cash out release on that type of product there directly, which is good. The way we look at lease stock is, so it's available for individual borrowers, trusts, companies, and non-residents as well. We adopt the net rent for servicing, and we use a low interest cover ratio of 1.25 times. So that's based on the net rent. So that's our servicing requirements, and providing the lease has at least a remaining term of 12 months.
Okay.
And it's third-party lease, we can accept and entertain that type of customer. And then if the lease income doesn't stack up where a broker's trying to position it as lease stock, it's not to say it's a deal that's gone dead. We can then look at other avenues such as alt doc or full doc, where we can still adopt the lease income, but we just might need to look at other areas of income of the customer itself.
I think that's a huge edge for Brighten, particularly the personal borrowers on that side of things. So in terms of complex structures, which we all love, there's not many vanilla deals out there.
No.
For that residential broker that is starting to put their toe into the waters for commercial, on fairly complex trust structures or company structures, what does Brighten do to sort of help hold the hand of a new commercial broker or residential broker that doesn't really have that background and experience?
No, it's a good question. So, look, there's no borrower's the same, right, Chris? And there can be some complex structures where you've got a business customer that, their main trading business is generating the income. Yeah. They might have separate SPVs for different properties that they hold. What we do with a broker that's not too familiar with commercial lending or borrowing structures is we ask them to go to the accountant of that customer and ask for a bit of an org chart. What are all the entities in place? Who are the directors and shareholders involved? Are there any trusts? And where does the flow of money go for that specific type of customer? The beauty with us at Brighten is we know there's complex customers who have multiple entities, and we can actually exclude some of their entities from servicing. So when it comes to commercial, look, group servicing is generally always required. However, if we're taking the trading business income, a guarantee from that business for that income, and that director may be involved with other entities, with other business partners that's not involved on their transaction, we can get a letter from the accountant to actually exclude those entities, providing that they're self-servicing.
And what about in terms of, let's just say that director has borrowings with other lenders for investment properties?
Yep.
Do you include that as well in terms of your servicing?
If it's in their personal names, yeah, we will.
Yep.
We will. Yeah.
But outside of that, let's just say they've got a trust SPV for a residential security up in Newcastle through another non-bank lender. How would, and I know it's horses for courses and every deal is different and how it's assessed, but would you be digging into that side of it, or would you need an accountant's letter just to say that the borrower is servicing their commitments?
Yeah, we'll need an account letter.
Within that SPV.
Yep, definitely. So if they can service within their SPV and that SPV is self-sufficient, not relying on the income that we're using for our loan, we can actually exclude that from there. We've supported the account letter, which is good.
Fantastic. Yep. Bridging loans. Just wanted to touch on that because we're seeing a lot of that now, just given the market. Like people have been buying and then struggling to sell. That might change over the next couple of months. Yeah, we've seen a glut of that. To be honest, we've been running for 10 years. I think we've done 4 or 5 in 10 years. And in the last 6 months, we've done well over a dozen. So, and it's great that we've got more and more options like yourselves that can offer that. But did you want to maybe just touch on the bridging loan product?
Yeah, sure. So if it's a commercial security, we can use our no-doc product for that. So the Brighten Lift product, where if you've got a customer that's maybe selling a commercial security and they're relocating their business and there's a bit of a period of market sale, we can actually look at that facility with a 3-year term. Or if it's a residential security, we've just changed our policy where traditionally when it was bridging, we had to have 2 securities, but now we can do single security under our bridging product. And that's really resonated well with the market. And we've seen a lot of growth in that because the reason we made that change is just like you're seeing a growth in bridging, we're seeing it as well. So we needed to plug a bit of a gap in that market and we're getting some wins in that. And then on our bridging product, we still end up to 15 mil on that.
15 mil?
Yep, for a residential security.
So mechanically, coming back to that, your second point around single security, how would that look in practice? Are you saying that you can just capitalise for 12 to 18 months with a agency agreement signed?
Yeah, generally 12 months, capitalise the interest where it's
they've committed to selling, but they just need a little bit more time to sell given that the market's gone back 5 to 10%.
Yep, that's it. Providing there's going to be no end debt left over, so to speak, we can, there's like kind of no servicing model that's capitalised interest. We can do it that way. And then the good news for the broker as well, on our bridging product, they actually get paid on like the peak debt, so to speak. So, and it's a good solution for the customer too. The market right now, like we're seeing some large bridging loans, not your sub 1 mil, like I'm talking sometimes 5 mil plus.
Is that downsizes or is there like a general
kind of luxury homes? So you've got a client's trying to sell these luxury homes. Yes, the market's slightly changed, and maybe they're not getting the offers that they want. So they just want to extend and, have it on the market for another, could be up on the market for 12 months, compared to a 3 month that they would attract. We're seeing those larger style where they're probably relocating to another luxury home, these high net worth astute clients, but they just need a facility to support that relocation.
And then further, or for all LMG brokers, and then in particular the commercial ones, it's a fair few of us at LMG. We've all got our old trusty, faithful lenders that we've dealt with before, and there's quite often a little bit of trepidation in trying new lenders. We've obviously got a relationship, so you've stayed close to our deals that have gone really well. What do you say to those new brokers that, or commercial brokers that are very experienced and do have that deal flow to sort of give you Brighten a go? We'd
love a crack. Like, give us an opportunity. The way when we set up commercial lending, we didn't want to create these great policies and market leading rates, because our rate card, it could sell itself, like compared to other non-bank lenders, very attractive rates. But we wanted to get credit right. I think 90% of a commercial transaction, it is credit. It's not your policy. It's not your rates. It's, can you get it done? Can you do the solution? If there's a risk and the broker communicated, can we come to terms? And if you've got a non-bank deal, Chris, you're sending it to a non-bank for a reason. And some of those reasons which we've helped customers, like we did a 6 mil deal for a client acquiring, it was a strong retail asset. One of the prime tenants, which was a fast food, restaurant, moved out. A new fast food operator was moving in. And some lenders will see that as a risk of, firstly, the premises is vacant. And then also this client was involved with another company that had been liquidated. Or administration, right? So voluntary administration, because they were involved with another business partner and there was a bit of a dispute. So some lenders would walk away from it, and the broker did take that to a bank, because, in our view, it was a bank client, but they were just involved in this, administration that they had. The way we looked at it was it was a full doc deal, so we full transparency on the financials. And all we wanted to request from the administrator has all, in terms of the creditors for that other company, has it all been paid? Has every cent in the dollar been paid? And we got that letter, and that satisfied us. Okay. So the dispute was going on, but as long as the creditors were all repaid, so we look at a bit of a flexible approach. Just make it easy to do business with, no red tape. Let's not over-conditionalize a loan. Let's not ask for information we don't need. So we'll never ask for bank statements, loan statements, unless we're doing a refinance and we can't see it on CCR. But just make it simple, and accessibility too. So provide quick access to a BDM, fast turnaround a scenario. Don't provide a drawn out no. If you can't do it, just say no the same day. And then give them confidence that, when we say we've got appetite and the application's lodged, there is appetite for it, because we actually workshop it with credit before, especially when it's a complex scenario or there's some underlying risk. We want to get their yes first. And we might ask additional information on that scenario from the broker, to provide that comfort to them, because, as when you've been given a yes from a BDM, you've told your customer, when you submit the app, you don't want to get a no from credit. It's just a poor experience.
I find that from experience, calling the BDM and workshopping over the phone is very important, because you can flesh out a lot of key questions with the BDM, and then also sending an email with the scenario, just so that allows you guys on your side to review it and workshop it, and then come back with, fairly firm pricing and any glaring issues that they might have. So I think where some brokers that I speak to get caught out is they might have that phone call, high level, and then look to lodge. I think that there should always be a secondary scenario email just to firm things up. Do you agree with that? Is that best practice? Or?
It is definitely best practice. So we do have a scenarios inbox available, which brokers have all access to. That goes for our scenarios team. But the way we've done it in commercial, when we built it up, we wanted it first to be vetted by the commercial BDM, so not the residential BDM that the broker has a relationship with. It gets referred to the commercial BDM in that respective state. And then that commercial BDM will take it to credit too. Generally, our commercial BDMs, 70% of the scenarios they'll say yes to, because they know it's within policy. But if there's something like an underlying risk factor, something that doesn't fit the norm, and we need to workshop with credit, especially high-end transactions. So things like a developer client has residual stock. They did a development of 30 units. They want us to take 15 units. Can we accept? And if so, max LVR. And we've assisted with that on residual stock.
Is that right?
Yeah. So we do residual stock under that private lending product.
Didn't know that. Okay. That's great.
Try and keep a concentration risk. If it's a large development, kind of under that 55% concentration risk, and the client may just want to cash out on that residual to assist with their next project.
And mate, I'm smashing you. Are you sure you don't work in credit? This is very impressive. I'm throwing a lot at you here.
That's all right. I work close with credit.
And mate, a lot of this is off script too, so you've done very well. In terms of that residual stock product, what sort of terms can you do? Is it like 12, 24 months? Like
3 years max.
3 years.
3 years. So on that private loan product, three-year terms, residual stock with residential, we'll go up to that 70% in your prime locations. When it's residential units, it has to be Cat 1 or Cat 2. However, we looked at residual stock where it's warehouses. You've got your developers building 12, 16 warehouses in the same, address, and we've assisted with a transaction where we took half of that. The developer sold one out of the 15 and then we took 8 on board, which some lenders, wouldn't do that. And then they'd sensitize their LVRs. Well, we just say, well, as long as the value stacks up and, the period of resale in the market is 6 months or less, it made sense to us just to do the normal LVR under that product.
I reckon you're going to get an influx of scenarios after this podcast.
Very good.
Who should they contact?
So first thing is reach out to your Brighten BDM. So Brighten has been on panel with low market group for a while in residential. So hopefully the brokers have a relationship already with their Brighten BDM, but if they're not sure, reach out to their LMG BDM. Reach out to, their white label team, or, if they're a commercial broker, they can reach out directly to their commercial asset finance team in their respective state. But our contact details are all available. So it'll be available on your portal. So they'll have the BDM contact details. But then myself, I'm happily assisting brokers, today. There's many brokers that call me up, first time brokers. I support WA and SA as well, in those states. I've been supporting the country for a while, and I've still got New South Wales and Vic, just based on relationships. Like, I've been dealing in the broker market for years. And there's some brokers where you just have that relationship and they just, they got a BDM, but they just want to come to you because, they're pretty confident. Sometimes I think maybe it's just the title, dealing with, a head of commercial. Some brokers like that, but I just think, just tell them how it is.
So you've been doing the LMG Roadshow the last couple of weeks?
Not the roadshow directly, not myself for commercial, but we are gearing up for that. So in each state, we are going to be holding some events like some commercial luncheons, focusing on commercial, inviting, some brokers to learn more about our products, meet our credit team as well. That'll be in Sydney, obviously, because credit's based in Sydney, but then across the states, over the next 6 weeks, I'll be visiting, all the states. And we're doing, some high level functions and then roadshows as well, because we wanted to firstly do some workshops with brokers who are writing commercial and want to learn more, and maybe they've gained interest about some of the things they've heard on this podcast today. And then we want to do some separate workshops, like commercial workshops for brokers where they need to understand commercial lending a bit more, how to run through servicing, what are the different types of security types, and where to find opportunities too. Like, we all hum on diversification for brokers. And I think now there's no more important time than now. If you're a residential broker, we all know home loans originate about 81% through the mortgage brokers, but commercial lending is no more than 35%. And when I speak to brokers who want to start commercial, I tell them, don't get excited about doing those large development deals. You don't have that expertise, and you don't want to give the customer bad experience. So refer that type of transaction to a commercial broker. Or if there's a corporate client that needs debt restructuring or cash flow needs like debtor finance, trade finance, refer that to a commercial broker. But if it's a simple commercial property transaction where a residential broker already deals in property, and the way we've set up our commercial lending is if you can help a self-employed client with their home loan or investment loan, you can help them with a commercial property loan with Brighten. That's how we wanted to design it. We use the same template form. So our account letter for residential, same as commercial. Servicing calc looks exactly the same. We just really wanted to make it easy for them. And then we help brokers with servicing too. Like, I've jumped on meetings with brokers.
Oh, that's dangerous saying that, mate.
Yeah, I know. And, sometimes they're customers too. Right? Sometimes there's customers too where, where they just need to know what type of questions to ask and what information we need. Yeah, but I think if you can help them, it comes back. And I'll have brokers call me with scenarios where if I can't do it, I'll suggest another low market lender on panel that can assist, because, as long as you help the broker, they always come back to you anyway. Even if you can't win that scenario, but you've referred them to somebody else on the LMG panel, they still come back to you because you know where to go. You know where that deal fits.
Well, mate, rounding out today, I guess some key takeaways for me is 15 mil, specialised assets and private credit. I know you covered off a few more. I'll have to listen to the podcast again.
Yeah.
But is there like any final message that you want to send out to the LMG brokers around obviously giving you guys a go? Is there anything else you wanted to sort of reiterate?
Yeah, no, we definitely, would love that crack, where we experience commercial property. And I know commercial property, they've got 3 to 5 lenders that they constantly deal with because we're creatures of habits, just who we are as humans. And plus, you've dealt with them before, they can get it done, and you're familiar with their appetite and policy. So, with us, we've come on board very excited about the partnership, with Brighten and LMG, and we just love a go. And the fact that we can lend up to 15 mil, we've got the funding available. We can look at specialised assets. We consider tax debt, and we don't charge extra rates. Like, we just have a prime commercial deal rate. We don't offer near prime rates or anything like that. And tax debt is something we're seeing a lot of as well. So we can help with those type of customers, developers, and just any clients that don't fit maybe traditional bank model, or they need, a higher LVR or a set and forget, no in review term, give Brighten a go. We'd love to be that go-to commercial lender. And the fact that, we've got proper credit in place, like non-bank credit, where they do apply a non-bank credit approach.
Well, mate, really appreciate your time today.
Thanks, Chris. Appreciate it too, mate. Thanks for hosting me.
It's been very insightful and I think beneficial for not only myself, but the LMG brokers. So looking forward to seeing you on the roadshow.
Likewise, mate.
And working with you more in the future.
Definitely. Thank you.
No worries. So thanks very much for listening. If you have a topic you want to discuss, please email us at brokerbulletin@lmg.broker or DM us on Instagram at lmg.broker, and our producer will make sure we answer it ASAP.
Thanks for tuning in to Broker Bulletin. We would hate for you to miss an episode. Subscribe to Broker Bulletin in your favourite podcast app. Has this episode been helpful? We'd love you to rate and review us. It'll help us deliver content that's useful to you and help others discover us. If you have great ideas for topics worth tackling or have burning questions you'd like addressed on an upcoming episode, reach out. Links in the show notes. See you next time.